Question 1. Risk management and insurable interest. Which of the following best describes the concept of insurable interest in the context of home insurance? A. The legal right to receive payment for a loss, regardless of ownership. B. The financial interest or stake that an individual has in the insured property at the time of the loss. C. A method used by insurance companies to assess the potential risk of insuring a property. D. The process of determining the value of a property for insurance purposes. Answer B. Explanation. Insurable interest is a critical concept in insurance law, and it refers to the policyholder's financial interest in the property they are insuring. It ensures that the insured person would suffer financial loss if the property were damaged or destroyed. Without an insurable interest, the insurance contract would be void. This concept helps prevent individuals from insuring properties they do not own or have no stake in, which could otherwise encourage moral hazard. The legal principle requires that insurable interest must exist at the time of the loss. Options. A is incorrect because merely having the legal right to receive payment does not establish insurable interest. C refers to underwriting and risk assessment, not insurable interest. D relates to valuation, not the legal interest in the property. Relevant rule. West Virginia state insurance laws, like other states, mandate that insurable interest must exist at the time of loss to ensure that insurance policies are based on actual economic stakes. Question 2. Scenario-based. Claims process and responsibilities. Mr. Anderson owns a home in West Virginia and recently suffered a fire that caused significant damage to his property. He filed a claim with his home insurance provider. During the claims process, the insurance adjuster requested documentation for several personal items, including electronics and jewelry, that were damaged in the fire. Mr. Anderson is unsure how to proceed. What should Mr. Anderson do next to ensure his claim is processed correctly? A. Refuse to provide documentation, as the adjuster should already have this information. B. Provide documentation, including receipts or an inventory list, to support the value of the damaged personal items. C. File a dispute with the insurance company regarding the adjuster's request. D. Wait for the insurance company to estimate the value of the items based on standard market prices. Answer B. Explanation. In the claims process, the policyholder is responsible for substantiating the claim with documentation such as receipts, photos, or inventory lists, especially for high-value items like electronics and jewelry. This helps the insurance company verify the value of the damaged items and ensure an accurate settlement. Failure to provide sufficient documentation could delay or reduce the claim payout. Options. A is incorrect because the adjuster's request is part of the normal verification process. C is incorrect since there is no dispute to file. The adjuster's request is standard procedure. D is incorrect because the policyholder needs to substantiate the claim, not rely solely on the insurer's market price estimates. Relevant rule. Under West Virginia insurance regulations, the policyholder must cooperate with the insurer's investigation, which includes providing necessary documentation to support the claim. Question 3. Named perils versus open perils. Which of the following best distinguishes named perils from open perils ECA home insurance policy? A. Named perils policies cover all perils unless specifically excluded, while open perils policies only cover those perils that are explicitly listed. B. Named perils policies cover only the perils that are explicitly listed in the policy, while open perils policies cover all risks unless they are specifically excluded. C. Named perils policies cover natural disasters, while open perils policies cover man-made risks. D. Named perils policies and open perils policies provide the same coverage but differ in cost. Answer B. Explanation. In a named perils policy, only those risks that are explicitly listed in the policy are covered. If a peril is not named, it is not covered. An open perils policy, on the other hand, covers all risks unless they are explicitly excluded in the policy document. Open perils coverage is generally broader and more comprehensive as it assumes coverage unless an exclusion applies, while named perils restrict coverage to only specific listed risks. Options. A is incorrect because it reverses the definitions. C is incorrect because both types of policies can cover natural and man-made risks depending on the specific terms. D is incorrect because named and open perils differ not just in cost but also in coverage structure. Relevant rule. West Virginia regulations allow homeowners to choose between different types of policies such as HOT3, open perils, or HOT2, named perils, depending on their risk tolerance and coverage needs. Question 4. Doctrine of utmost good faith. The doctrine of utmost good faith is a critical principle in insurance contracts. Which of the following best describes its application in a home insurance policy? A. Both parties in the insurance contract must act honestly and disclose all relevant information. B. The insurer has the sole responsibility to disclose any potential risks to the policyholder. C. The policyholder must fully disclose personal financial information to the insurer. D. Only the insurer is bound by this doctrine when providing a quote for a policy. Answer A. Explanation. The doctrine of utmost good faith is fundamental to all insurance contracts, including home insurance. It requires both the insurer and the insured to disclose all material facts that could affect the policy. This principle prevents fraud and ensures that the contract is based on transparency. The policyholder must reveal any risk factors that could influence the coverage, and the insurer must provide accurate terms and conditions for the policy. B is incorrect because both parties, not just the insurer, are obligated to disclose relevant information. C is incorrect as it implies a focus on financial disclosure while the doctrine covers broader material facts related to the risk. D is incorrect because the obligation applies to both parties. Relevant rule. The West Virginia Department of Insurance mandates compliance with this doctrine to ensure transparency and fairness in insurance agreements. Question 5. Perils and exclusions. Which of the following perils is typically not covered under a standard HO3 home insurance policy unless additional coverage is purchased? A. Fire. B. Theft. C. Earthquake. D. Windstorm. Answer C. Explanation. The standard HO3 home insurance policy covers open perils for the dwelling, coverage A, and named perils for personal property, coverage C, while common perils like fire, theft, and windstorm are covered. Earthquakes are typically excluded unless additional earthquake coverage is purchased through an endorsement. Earthquake damage presents a significant risk, which is why insurers exclude it from standard policies and require a separate endorsement or policy. A is incorrect as fire is a covered peril in almost all standard home insurance policies. B is incorrect because theft is a named peril under coverage C. D is incorrect as windstorm damage is commonly included under a HO3 policy. Relevant rule. West Virginia homeowners can purchase earthquake endorsements or separate policies for earthquake coverage if needed, particularly in regions prone to seismic activity. Question 6. Home insurance discounts. Which of the following could result in a premium discount on a West Virginia home insurance policy? A. Living in a high-crime neighborhood. B. Installing a monitored security system and smoke detectors. C. Filing multiple claims within a short period. D. Owning a home with outdated wiring and plumbing. Answer B. Explanation. Homeowners who take proactive steps to mitigate risks, such as installing monitored security systems, smoke detectors, and fire alarms, are typically eligible for discounts on their home insurance premiums. These safety measures reduce the likelihood of theft, fire, and other risks, making the home safer and less costly to insure. In contrast, living in high-crime areas or having outdated systems increases risk, potentially leading to higher premiums. A is incorrect because living in a high-crime area may result in higher premiums. C is incorrect because filing multiple claims can increase premiums rather than lower them. D is incorrect because outdated wiring and plumbing increase the risk of damage and can raise premiums. Relevant rule. Under West Virginia insurance regulations, insurers offer discounts for loss prevention measures, as these reduce the insurer's exposure to risk. Question 7. Scenario-based. Claim settlement. Mrs. Patel's home in West Virginia was recently damaged in a severe hailstorm. She filed a claim with her insurance company under her HO3 policy. The adjuster offered her a settlement based on the actual cash value (SEV) of the roof, which had depreciated over time. Mrs. Patel believes the settlement should be based on the replacement cost. What could be the reason her claim was settled using ACV instead of replacement cost? A. Mrs. Patel's policy only covers her roof under an actual cash value endorsement. B. HO3 policies always settle roof claims based on ACV, regardless of endorsements. C. Mrs. Patel did not file her claim within 30 days of the incident. D. The insurance company cannot offer replacement cost coverage for roofs over 10 years old. Answer A. Explanation. In a HO3 policy, coverage for the dwelling is typically provided on a replacement cost basis, meaning the insurer pays the cost to replace the damaged property without considering depreciation. However, if the policyholder has an endorsement limiting coverage for the roof to actual cash value, the settlement will be based on the depreciated value of the roof, not the replacement cost. This could occur if the homeowner opted for a low premium or if the insurer requires such coverage for older roofs. B is incorrect because HO3 policies do not automatically settle roof claims using a CV unless specified in an endorsement. C is incorrect because the timing of the claim filing is unrelated to the ACV settlement. D is incorrect as insurers can offer replacement cost coverage even for older roofs depending on policy terms. Relevant rule. West Virginia homeowners should review their policies and endorsements carefully to understand whether specific items like roofs are covered on an ACV or replacement cost basis. Question 8. Liability coverage limits. Under a typical home insurance policy coverage E, which of the following would not be covered under personal liability insurance? A. Injuries to a guest who slipped and fell on the insured's property. B. Damages caused by the insured's pet to a neighbor's property. C. Injuries to the insured while they are working from home. D. Legal defense costs in a lawsuit for property damage caused by the insured. Answer. C. Explanation. Personal liability coverage under coverage E of a home insurance policy provides protection for bodily injury or property damage caused to others by the insured or members of their household. It also covers legal defense costs in the event of a lawsuit. However, it does not cover injuries sustained by the insured themselves. Injuries to the insured would typically be covered by health insurance or workers' compensation if work-related. A is incorrect because personal liability covers guest injuries. B is incorrect because damages caused by pets are typically covered under personal liability. D is incorrect as legal defense costs are included in personal liability coverage. Relevant rule. West Virginia home insurance policies follow these liability rules, and exclusions for injuries to the insured are common across the industry. Question 9. Regulatory environment. Unfair claims practices. Which of the following would be considered an unfair claims practice under West Virginia insurance law? A. Denying a claim after thorough investigation reveals that the damage is not covered. B. Failing to acknowledge a claim within a reasonable time. C. Offering a lower settlement than the insured requested based on policy limits. D. Requesting additional documentation to verify a claim's validity. Answer. B. Explanation. An unfair claims practice occurs when an insurer fails to fulfill its legal obligations to policyholders in the claims process. Under West Virginia law, insurers must acknowledge and investigate claims promptly. Failure to respond or investigate within a reasonable time is considered an unfair practice. Denying a claim based on valid policy terms or requesting additional documentation to verify a claim is not considered unfair as long as these actions follow standard industry practices. A is incorrect because denying a claim after investigation is valid. C is incorrect if the lower settlement is in line with policy limits. D is incorrect because it is reasonable to request additional documentation for claims verification. Relevant rule. West Virginia's Unfair Trade Practices Act outlines specific standards for how insurers must handle claims to protect consumers from unfair treatment. Question 10. Underwriting process. Which of the following factors is most likely to increase a homeowner's insurance premium in West Virginia? A. The homeowner has a high credit-based insurance score. B. The home is located in an area with a low crime rate. C. The home has a history of frequent insurance claims. D. The homeowner has bundled their home and auto insurance policies. Answer. C. Explanation. A home with a history of frequent claims is considered a higher risk by insurers, leading to an increase in premiums. Insurers use claims history as a key underwriting factor because homes that have experienced frequent losses are statistically more likely to file future claims. On the other hand, high credit scores, low crime areas, and bundling policies typically lead to discounts rather than increases in premiums. A is incorrect because a high credit score usually results in lower premiums. B is incorrect because low crime rates often lower premiums. D is incorrect as bundling policies generally leads to discounts. Relevant rule. West Virginia insurers use claims history and other risk factors to determine premiums under state insurance regulations. Question 11. Coverage types. Which of the following is covered under a HO2 policy but not under a HO1 policy? A. Theft. B. Falling objects. C. Fire or lightning. D. Windstorm or hail. Answer. B. Explanation. A HO2 policy, known as a broad form policy, covers more perils than a HO1 policy. HO1 is a basic form that only covers a limited set of named perils such as fire, windstorm, and theft. HO2 expands coverage to additional perils, including falling objects, which are not covered under a HO1 policy. A, C, and D are incorrect because these are all covered perils under both HO1 and HO2 policies. Relevant rule. West Virginia regulations allow insurers to offer different levels of coverage from basic to broad form policies depending on the homeowner's needs. Question 12. Scenario-based. Additional living expenses. Ill. Due to a kitchen fire, Mrs. Thompson's home in West Virginia becomes temporarily uninhabitable. Her home insurance policy includes coverage for additional living expenses. Ill. During the repairs she stays at, a hotel incurs extra dining costs and needs to rent a storage unit for her belongings. Which of the following expenses is not covered under ALE? A. Hotel stay. B. Increased dining expenses. C. Renting a storage unit. D. Daily commute costs to work. Answer: D. Explanation. ALE coverage is designed to cover necessary and reasonable living expenses while the insured's home is being repaired after a covered loss. This includes costs such as hotel stays, increased dining expenses, and rental storage. However, costs related to the insured's daily commute to work are typically not covered under ALE, as they are considered normal living expenses that would have been incurred regardless of the loss. A, B, and C are incorrect because these are covered under ALE in most home insurance policies. Relevant rule: West Virginia home insurance policies, including ALE coverage, are regulated to ensure the homeowners are compensated for additional necessary living costs during repairs. Question 13. Valuation methods. Which method of valuation will result in the highest payout for a total loss under home insurance policy? A. Actual cash value (SCV). B. Market value. C. Replacement cost. D. Agreed value. Answer: C. Explanation. The replacement cost method provides coverage for the cost to rebuild or repair the home with similar materials without accounting for depreciation. This typically results in the highest payout compared to other valuation methods. Actual cash value (SCV) subtracts depreciation from the payout. Market value considers the current value of the home, which may be less than replacement cost, and agreed value is a predetermined amount set between the insurer and insured. A, B, and D are incorrect because they often result in lower payouts than replacement cost coverage. Relevant rule: West Virginia insurers offer both ACV and replacement cost policies, and homeowners should be aware of the differences in coverage. Question 14. Dwelling versus personal property coverage. In an HO3 home insurance policy, which of the following would be covered under coverage C? Personal property, but not under coverage with dwelling. A. Built-in kitchen cabinets. B. Detached garage. C. Furniture. D. Roof damage caused by air. Answer: C. Explanation. Coverage with dwelling typically applies to the structure of the home, including built-in features like cabinets and the roof, as well as any attached structures. Coverage C. Personal property, on the other hand, covers movable items like furniture, electronics, and clothing. Furniture is specifically covered under coverage C, not coverage A. A, B, and D are incorrect because these pertain to the dwelling structure and are covered under coverage A. Relevant rule: homeowners in West Virginia can choose policies that include both dwelling and personal property coverage, ensuring protection for the home's structure and belongings. Question 15. Flood insurance. Which of the following statements about flood insurance in West Virginia is true? A. Flood damage is covered under standard home insurance policies. B. Flood insurance is required by law for all West Virginia homeowners. C. Flood insurance must be purchased through the National Flood Insurance Program, NFIP, or a private insurer. D. Flood insurance covers water damage from broken pipes inside the home. Answer: C. Explanation. Flood damage is not covered under standard home insurance policies. Homeowners must purchase separate flood insurance either through the NFIP or from private insurers. Flood insurance is typically required for homes in designated flood zones, but not all West Virginia homeowners are legally required to have it. A is incorrect because standard home insurance does not cover floods. B is incorrect because flood insurance is only mandatory in certain high-risk areas. D is incorrect because water damage from broken pipes is generally covered under a standard home insurance policy, not flood insurance. Relevant rule: West Virginia homeowners can access flood insurance through the NFIP or private insurers, particularly in areas prone to flooding. Question 16. Policy cancellations and non-renewals. In West Virginia, what is the minimum number of days notice an insurer must provide before canceling a homeowner's insurance policy due to non-payment of premiums? A. 10 days. B. 15 days. C. 30 days. D. 60 days. Answer: A. Explanation. West Virginia insurance law requires that insurers provide at least 10 days notice to the policyholder before canceling a policy for non-payment of premiums. This notice period allows the homeowner time to rectify the situation and avoid a lapse in coverage. B, C, and D are incorrect because they do not reflect the minimum legal requirement for non-payment cancellations. Relevant rule: The West Virginia Insurance Code specifies notification requirements for policy cancellations, ensuring that homeowners receive adequate warning before their coverage is terminated. Question 17. Ordinance or law coverage. Ordinance or law coverage provides protection for which of the following situations: A. The cost of rebuilding a home to current building codes after a covered loss. B. Repairs to a car damaged by a falling tree on the insured's property. C. Replacing personal property at current market value. D. Paying off a mortgage balance after a total loss. Answer: A. Explanation. Ordinance or law coverage helps cover the cost of bringing a damaged home up to current building codes during repairs or rebuilding after a covered loss. This coverage is important because building code changes may require more expensive materials or methods than what was originally used in the home. B is incorrect because auto damage would be covered under an auto policy, not home insurance. C is incorrect because replacing personal property is typically covered under personal property coverage, not ordinance or law coverage. D is incorrect because mortgage payoff is unrelated to ordinance or law coverage. Relevant rule: West Virginia homeowners can add ordinance or law endorsements to their policies to cover the cost of compliance with current building regulations. Question 18. Home-based businesses. Which of the following would be the best way to ensure coverage for a home-based business in West Virginia? A. Rely on the personal property coverage in the home insurance policy. B. Purchase a business owner's policy. C. Increase the limits on personal liability coverage. D. Add an endorsement for high-value business equipment to the home policy. Answer: B. Explanation. While personal property coverage in a home insurance policy may cover some business-related equipment, a business owner's policy (BOP) provides more comprehensive coverage for home-based businesses. This includes both property and liability coverage for the business, ensuring that the homeowner is adequately protected against risks related to the business. A is incorrect because personal property coverage is limited and may not fully cover business assets. C is incorrect because increasing personal liability does not address business-specific risks. D is incorrect because endorsements for business equipment do not provide liability coverage or address all business risks. Relevant rule: West Virginia insurance regulations allow homeowners to purchase BOPs to ensure their home-based businesses are fully protected. Question 19. Deductibles and premiums. How does increasing the deductible on a home insurance policy affect the premium? A. The premium increases. B. The premium decreases. C. The premium remains the same. D. The deductible has no impact on the premium. Answer: B. Explanation. Raising the deductible on a home insurance policy typically results in a low premium because the policyholder agrees to take on more risk by paying more out-of-pocket before the insurance coverage kicks in. Insurers reward this increased responsibility by lowering the cost of the premium. A, C, and D are incorrect because they do not accurately reflect the relationship between deductibles and premiums. Relevant rule: West Virginia insurance providers offer a range of deductible options, and increasing the deductible often results in premium reductions. Question 20. Scenario-based. Windstorm damage. A severe windstorm causes significant damage to Mr. Evans' home in West Virginia. The roof is torn off and water enters the house, damaging the walls, flooring, and furniture. His home insurance policy covers windstorm damage, but he's unsure about what will be reimbursed. The policy includes coverage for dwelling, coverage C, personal property, and replacement cost for the structure. Which of the following will not be covered under Mr. Evans' home insurance policy? A. Roof repairs. B. Replacement of damaged furniture. C. Temporary lodging expenses during repairs. D. Damage to a detached shed caused by falling tree limbs. Answer: D. Explanation. The roof repairs coverage A and the replacement of damaged furniture coverage C will be covered under Mr. Evans' policy, as well as temporary lodging expenses, which are part of additional living expenses if the home is uninhabitable. However, damage to a detached structure, such as a shed, is not automatically covered unless the policy specifically includes detached structures coverage. The shed damage would need to be covered under coverage B. Other structures, which might not be included in all policies, they, B and C, are incorrect because these are covered under the relevant sections of a standard home insurance policy with windstorm coverage. Relevant rule: in West Virginia, detached structures like sheds typically require separate coverage under home insurance policies than other structures provision. Question 21. Insurable interest. Which of the following individuals would not have an insurable interest in the property? A. A person who holds a mortgage on the property. B. The tenant renting the home. C. A family friend who visits often. D. A co-owner of the property. Answer: see explanation. An insurable interest means that the person will suffer financial loss if the property is damaged. A mortgagee, tenant, and co-owner all have insurable interests. A family friend who visits the property often has no legal or financial stake in the property and thus no insurable interest. A, B, and D are incorrect because these parties do have an insurable interest based on financial or ownership stakes. Relevant rule: insurable interest is a key principle in insurance law requiring a policyholder to have a financial interest in the property to obtain insurance. Question 22. Replacement cost versus actual cash value. Which statement accurately explains the difference between replacement cost and actual cash value? A. Replacement cost is the value after depreciation, while actual cash value is the cost to replace with new materials. B. Actual cash value factors in depreciation, while replacement cost does not. C. Actual cash value only applies to personal property, while replacement cost applies to structures. D. Replacement cost includes market value of the property, while actual cash value is based on appraisal. Answer: B. Explanation. Replacement cost refers to the amount needed to repair or replace an insured item without accounting for depreciation. Actual cash value (SCV) takes into account depreciation based on the item's age and condition. A, C, and D are incorrect because these choices misrepresent how depreciation and replacement costs are applied. Relevant rule: most West Virginia policies provide the option to insure the home at replacement cost or actual cash value. Homeowners should be aware that ACV results in low payouts due to depreciation. Question 23. Standard homeowners insurance coverage. Which of the following perils is typically excluded from a standard homeowners insurance policy? HO3. A. Fire. B. Theft. C. Earthquake. D. Windstorm. Answer: C. Explanation. A standard HO3 policy excludes earthquake damage, which requires a separate endorsement or policy. Fire, theft, and windstorm are standard covered perils. A, B, and D are incorrect because these are common covered perils under the basic provisions of an HO3 policy. Relevant rule: in West Virginia, homeowners must purchase additional earthquake coverage if they wish to be protected against this specific risk. Question 24. Unfair claims practices. Under West Virginia insurance law, which of the following is considered an unfair claims practice by an insurance company? A. Settling a claim within a reasonable time. B. Requesting additional documentation to verify a claim. C. Failing to affirm or deny coverage within a reasonable time frame. D. Offering a settlement for less than the amount claimed. Answer: C. Explanation. Failing to affirm or deny coverage within a reasonable period is an unfair claims practice under West Virginia insurance law. A is incorrect because settling a claim promptly is standard practice. B is incorrect because requesting further documentation is within the rights of the insurer. D is incorrect because insurers may offer a lower settlement based on their evaluation of the claim but must justify it. Relevant rule: West Virginia's Unfair Claims Settlement Practices Act mandates insurers to handle claims in a timely, fair, and efficient manner. Question 25. Perils and exclusions. A homeowner in West Virginia experiences damage to their home from rising floodwaters after a storm. What is the best action for the homeowner to take if they do not have flood insurance? A. File a claim under their standard home insurance policy. B. File a claim with the National Flood Insurance Program (NFIP). C. Seek assistance from the insurance company's emergency fund. D. Apply for federal disaster assistance from FEMA. Answer: B. Explanation. Flood damage is not covered under a standard home insurance policy but is available through the National Flood Insurance Program (NFIP). A is incorrect because standard policies exclude flood damage. C is incorrect because emergency funds are not typically available for such events without coverage. D may be a secondary option but does not replace insurance coverage. Relevant rule: homeowners in flood-prone areas in West Virginia are strongly encouraged to purchase separate flood insurance through NFIP. Question 26. Coverage dwelling. Which of the following is not covered under coverage dwelling of a standard homeowner's insurance policy? A. The home's roof. B. A detached garage. C. Built-in kitchen appliances. D. A fence on the property. Answer: B. Explanation. Coverage applies to the dwelling and attached structures. Detached structures like garages are covered under coverage. B, A, and C are incorrect because the roof and built-in appliances are part of the dwelling. D is incorrect because fences are typically covered under other structures. Coverage B. Relevant rule: coverage focuses on the main dwelling, while coverage B includes other structures on the property. Question 27. liability coverage. In a standard homeowner's insurance policy, which of the following would be covered under personal liability coverage? A. Damage to the homeowner's property. B. Medical expenses for a guest injured on the property. C. Injuries sustained by the homeowner. D. Damage to the homeowner's car parked in the driveway. Answer B. Explanation. Coverage E is for personal liability, including bodily injury or property damage to third parties. Medical expenses for guests fall under this coverage. A, C, and D are incorrect because these are not third-party liability issues. Homeowners' own property or injuries are not covered under this section. Relevant rule: liability coverage protects homeowners against claims made by others for injuries or damage. Question 28. Height modified coverage form. What is the primary reason a homeowner would purchase a height modified coverage policy? A, they want the broadest coverage available. B, they own an older home where replacement cost exceeds market value. C, they need flood insurance. D, they have a home with high value jewelry. Answer B. Explanation. Height policies are designed for older homes where the replacement cost is significantly higher than the home's market value. These policies provide more affordable premiums by covering damages at actual cash value. A, C, and D are incorrect because they describe other policy needs, HOTHRI, flood insurance, or additional endorsements. Relevant rule: height policies are commonly used for historic or very old homes in West Virginia where full replacement cost insurance would be impractical. Question 29. Consumer protection laws. Which of the following is a key protection offered to consumers under West Virginia home insurance regulations? A. The right to cancel a policy without penalty at any time. B. Mandatory coverage for all perils. C. The right to receive advance notice before a policy is non-renewed. D. Free premium reductions for homes with no claims history. Answer C. Explanation. West Virginia law requires insurance companies to provide advance notice before non-renewing a policy, giving homeowners time to secure new coverage. A is incorrect because while policyholders may cancel, they may face penalties. B is incorrect as policies do not cover all perils. D is incorrect because premium reductions for no claims history are not automatic. Relevant rule: West Virginia home insurance laws include consumer protection provisions that require timely notice for cancellations and non-renewals. Question 30. West Virginia FAIR Plan. The West Virginia FAIR Plan is designed to A. Provide homeowners coverage to high-risk properties that cannot find insurance elsewhere. B. Offer discounted rates to homes in low-risk areas. C. Cover flood damage for properties without NFIP insurance. D. Reduce the cost of premiums for older homes. Answer A. Explanation. The West Virginia FAIR Fair Access to Insurance Requirements plan is for homeowners who are unable to secure coverage through standard insurance markets due to high risk, such as homes in disaster-prone areas. B, C, and D are incorrect because they describe unrelated programs or benefits. Relevant rule: the FAIR plan provides essential insurance coverage to homeowners who would otherwise be uninsurable.